Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room, the first HUBB Live Trading Room of 2026. It's great to be back with you all. As always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing's to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, the headlines coming through for today is that Venezuela will ship sanctioned oil to the U.S. indefinitely, as they say from sources unnamed at this moment. So, interested to see what Rob's thoughts are on that, the overall impact that'll have on the oil sector. And of course, very excited to interact with you all and get into an abundance of other topics for this session. So, without further ado, let's kick off. Rob, how you doing?
Good, Zach. How are you? Happy New Year, everyone. If you weren't in one of our previous two webinars this week, hope everybody had a great holiday season, kicking off the new year with kind of a bang here. I am going to assume that most of you attended either Monday's EWO Live or yesterday's Trade Finder, so I won't spend too much time going over the Santa Claus rally stuff, etc. I'll probably hit that a little bit on Thursday night, tomorrow night in the insiders meeting. But for now, the keys to the market, we'll get to oil, et cetera, in a bit. But on the S&P, we did close above. So if you were during Trade Finder, we were wanting to see if we could get that close above 690 on the SPY, and we did. And now we're looking to see if we can provide a follow-through day. We just need to close. It's more ideal if you close above the high of the previous day as far as a follow-through day. That's viewed as a stronger follow-through day, but just closing higher the next day also counts. Maybe just doesn't have quite the same weight, if that makes sense. But so far, so good, it looks, as far as the Wave 5 extended. There was a question asked yesterday on why this didn't relabel when we took the new high. And it just means that we're in a Wave 5. If there was enough strength as evidenced by the Elliott Wave algorithm, then that 5 would have turned to a 3. But at least for now, it's a Wave 5, and the tap box is quite a bit higher, 760 being the lower end of it. So it looks like we could be in rally mode. We'll have to wait and see. If we do indeed give a follow-through close today, that's going to be key. So that's what we'll be watching for. Where do we close today? Does it count as a follow-through day, or are we destined to come back and test 690, at least as a potential level of old resistance becoming new support type of thing? So that's the interesting part on the S&P. Always good to check volume when you break a major point of support or resistance. I think the volume is solid. That's what we want. We don't want these big, huge green bars like these red ones are, because that usually marks at least a short-term top. If you have a break with a big, massive volume spike, that may sound counterintuitive, but if you just think of it as everybody that wanted to buy bought that day, then it kind of gives you an idea that just consistent volume is what investment managers do. And then that gives you that kind of a 45-degree angle move, which, as you know, I prefer because you have less volatile corrective moves. The market always moves in impulses and corrections. You can see it all over the chart. That's why Elliott Wave is so good, because that's the crux of Elliott Wave. But you want to see your corrective moves be less severe if you're long, obviously, and that's what occurs when you have steady, solid volume and not these big, massive volume vertical move spikes. You know the rule. What goes vertically up oftentimes comes vertically back down, and we've seen it a lot here lately. So that's where we are on the S&P. We'll check the other markets real quick, and then we'll get to why we're really here in this event each week, and that's for the AI signals. So looking at the Dow pulling back a little bit, but you can see that it broke its high from December, and we had good solid follow through. Look at that follow through day yesterday, where we opened on the low, closed on the high. Can't get much better as far as a confirmation day than that, as we closed at a new high on Monday. So now today we're pulling back a little bit, but that's normal. You can see the separation from the 10-day moving average. That's why that's important. The one thing about the DIA is you can see on the high today, we were at 142% extension. That's starting to get a little long in the teeth, or whatever that expression is, long in the tooth, whatever, but getting extended. And it's a little bit vertical. So I'm not as constructive on the DIA or the Dow just in the very short term. Um, there's always a possibility that at 5 relabels to a 3, but the further we go to the upside, and with 500 right there on the DIA, it's hard to imagine that we don't hit that. I mentioned yesterday we're in the tractor beam effect to draw it up there. But once we get there, we'll have to wait and see if that's been enough because we're now outside the tap box. We've actually gone higher than the upper end of the tap box, as you can see. So what happens now? Is that the end of the wave 5 move? And at some point, we'll be looking for a corrective wave 4, or does that 5 relabel to a 3? That's what's to watch on the DIA. Then the Qs trying to break out here a little bit. Really, you consider it if you wonder when is it actually considered a breakout? Well, from a real technical standpoint, we are breaking out today. Well, why didn't yesterday count? Because this high wasn't taken out yet. So the movement here, we could just extend this line over to here based on the fact that yesterday's high didn't take out the previous one and just create a little bit of a larger triangle formation. So you can draw it either way. And again, sometimes people make comments on they don't necessarily agree with where I draw my trend lines. Well, it's not important to me to be spot on correct on the exact points. It's just a general view. I'm just looking for a picture. Is it a triangle? That's really what I'm looking for. And getting real picky on where the trend lines are drawn, if that's something that matters to you, that's fine. It just doesn't really matter to me. I'm just looking for a generalized picture. But as a reminder, even though that we have a wave 4 labeled down here, it's still green, so it's still active. But it's a wave 5 to the upside pattern. Don't get caught thinking that the Qs are definitely breaking higher. They might. It looks like they want to, but it's not there yet. And there's always the possibility of a breakout in either direction in any triangle. Hopefully, you've heard me say that numerous times now. And then the IWM had kind of a nice up day yesterday, which is interesting because when we go look at TLT, which is prices on the 20-year, you can see that yesterday we were kind of lower. So lower in price, higher in rates. And yet the IWM had a big move higher. And then today we're up in prices on TLT, and yet the IWM is pulling back. But it's pulling back a bit because we got a little too far from the 10-day moving average yesterday with that close basically on the high of the day. So if you remember, I've kind of borrowed the Fed's dual mandate thing and talk about there's dual signals, or I'll come up with a good word to use for that. But there's two ways that the IWM trades. One, it's the most sensitive to interest rates, the most sensitive market to interest rates. We've talked about that a lot. The small caps, small companies need to borrow money to grow and expand, all that stuff. That's why it's so sensitive to rates. They borrow, quite a bit of money. But the other side is it is an indicator of risk on. They're higher beta stuff in the small cap. So if the IWM is doing good, especially in the face of slightly higher rates, we're giving some of that back today again, but slightly higher rates, then that tells you that there is an appetite for risk in the market in general. And it's just something to keep in the back of your mind when you're making your own trading decisions. Where's the market's view? Is the market willing to take risk? Is the market a bit more conservative at the moment? Where is it? And the IWM can be an indicator of that. And just as a refresher, or to repeat myself again, If it's not moving in lockstep with rates, it's moving based on the risk tolerance in the market. So right now, you'd have to say that the market is telling us that there is a tolerance for risk, at least right now. And that's all we can do in analyzing and doing technical analysis is analyze the data that we have at any point in time. Um, Obviously, we try to use that for forecasting, but really, the crux of it is where are things right now? We can talk about where things are likely to go from here. Nobody knows that for sure. That's where our indicators come in. And then going to the dollar, which is being very cooperative, staying in the Goldilocks triangle, or excuse me, Goldilocks channel. I've extended that out. And as long as the dollar stays in this area, as I talked about most of last year, it's constructive for the equities market to go higher. We get a break out of this channel, then we'll have to talk about what that may mean, depending on which way it breaks. But for now, it's cooperating very well, staying in the lower end of the channel, which is good from a currency exchange standpoint. All right, so with that, covered off all the other markets yesterday. Not a whole lot going on. The metals are pulling back a little bit, but that's kind of to be expected. You can see the GLD, which I think looks a little more constructive than the SLV when we go to it with all this wild volatility that's been going on. Talked about this both Monday and Tuesday. Gap up, gap down, gap up, gap down. I mean, it's just a seesaw back and forth. And so, same thing today, a little bit of a gap down in SLV, in silver. The thing to note here is that this kind of volatility, and you can see how it's an outlier from what normally occurs in the SLV. Look how small these daily bars are, indicating not a lot of intraday volatility. And then even as we ascended up through here, and then you get this wild stuff here, that kind of volatility is indicative of market tops and market bottoms. So which is it? Obviously, you would lean more towards a market topping type scenario. Pardon me, considering that SLV's already had a nice run, especially going all the way back to the beginning of September. That's a big move, basically a double in the SLV just since September. So maybe we are at a short-term top. But we also have to respect that this wild volatility here could be a pause, pardon me, before another vertical breakout move occurs. So I have to get a little more idea of what's going on with the SLV, but the move down is working well for our calendar spread in the time strategy on SILJ. We may take that off today. We may see if there's a little bit more sideways move, but with this kind of volatility, it's holding some premium in that would like to see move out. And we'll analyze that throughout the rest of the afternoon was my point. Let's get to the AI list, and I'm going to move the calendar back to yesterday because pretty extraordinary list. Pick your favorite one of all these that are above 75. How long's it been since have we ever seen, since the AI began, this many? I can't remember this many results that were over 75. Gives you an indication of where things are in the market. But when you go through here, you see there's a lot of financials, a lot of banking. There's Rio that we did yesterday, which is kind of the commodities space, taking a chunk of that market. So many different things to look at. FCX is here as well, which is very similar to Rio Tinto. And then you go through all the different financial stocks. They are taking a little bit of a breather today, but the financials had gotten possibly just a bit overbought. We take a look at the chart. We already have BCS, but the chart of Ally looked like a pretty good break of the A wave with confirmation yesterday, but then we have to come back down and test the 10-day moving average again, apparently here. But the zigzag target, even if we don't reach the AI target, is still higher. We will watch very closely because the B wave was 33%. You're only looking for the 61.8% extension. And then if we get an extended C wave, which does happen a lot in the wave three, the 100% extension is above the AI target. And we would use the AI target if we're able to break above the 61.8. So we'll keep watching that. Interesting that financials chose today to take a break with rates ticking down. You would have thought that would have been pretty supportive of the financial sector. But again, the financial sector has had a nice move. There's BCS, it's at some point in time, you're going to tick back down. But there's a lot of room to run here on BCS. So we're going to hang in there with that one. We closed out a couple others. Don't like having too many alerts in any one sector, even on these AI searches, which is why we didn't do all financials yesterday. We branched out. You can see there's some other ones that are interesting. FedEx is in a totally different environment, and we're getting a little bit of a pause today. The issue on why an alert wasn't sent out on this, if you're wondering, is there just wasn't for a $300 stock that much more of a move expected. But if we pull back a little bit, because we just didn't get the chance yesterday with the way it traded closing on the high, this one could become interesting as far as further diversification. Again, we don't want to have everything in the in the financial sector. So we need to broaden out a little bit. And so we're broadening out into areas that are moving. We had GOLD. I do think that maybe gold is positioned a little better than silver at the moment, but we'll see what that volatility at the top of the SLV chart means over the next few days. But I think gold is acting really strong today, considering it closed on its high yesterday as well. So giving a solid performance, considering that. Not like what Ally did when it came all the way back to its 10-day moving average. GOLD could still do that, but for now, just kind of trading exactly the way you would like it to for an expected continued move up from here. So I'm happy to answer any questions on any of those specific ones. You could go across the range and pick what you wanted, but I just wanted to point those things out that be careful of when you see a lot of stocks in the same sector of putting a whole bunch of trades in your account in the same sector, because if that sector corrects, then all your alerts go down. So part of the reason why we took some off when they moved up in that move. Now, looking at today's list, now we have a couple of other things to look at. This Charles River Labs is a little bit extended. I like to go to the options because I've been familiar with this stock in the past, and sometimes, like now, it has good open interest. Other times, not so much. So I'm going to switch the volume because not so interested in the volume of the day. I'm more interested in the deltas, as you know. We wouldn't look at January anyway. February, so there's no March or April options, so we have to go all the way out to May. So you can see the dramatic drop off in open interest when we go that far out. So that's unfortunate. When January hits expiration, February will become the front month and March will appear. If you don't know this, there is always a next month option. So you can see there's January and then February, then we skip to May. But once we hit January, the third Friday of January, the 16th, that's it, the expiration. February becomes the front month, and then the next month options will appear. So March will appear, which would be quite interesting. But based on this chart, by the time we get to January 16th, we may already be at our target if the market continues to hang in the way it has. So that's not the ideal scenario. That's not what we really want. But that's what happens in trading sometimes. Is it's just difficult to find the ideal entries. We could do May right now, but you can see what's going on with the open interest being low, the spreads being a bit wide. We can get in some more strikes here um, so that we can get a little further down in the delta. Um, Gosh, deltas are all over the place. Um, Interesting. Get delta on there twice now. Um, Change this to put IV in there. That's cool. It is. This software just gets better and better by the day. It's amazing. So let's get off January, get back to May, as we search down for a better delta. You can see, and this has been so frustrating, um, the wide spreads. This one's a little different. One of the things I've been talking about is how people have started to figure out the um, delta gamma acceleration. And when I first started trading that, realizing how the delta curve was constructed, what the math is behind it, understanding that that's where the greatest acceleration can be when you're right. As far as an options move, people figured that out. There's way more open interest in out of the money options. It was challenging from an open interest standpoint when I first started doing it, but not so much anymore. Although the May options for CLR or CRL are very anemic in the strikes that we would look for. So, when you go through the process, and that's what I like to do, is just talk it out with you on what I'm thinking, what's going through my mind when I go through and look at the charts and try to figure out which ones would be more ideal for doing something with. Again, solid on the volume numbers, what you want to see, not the crazy spikes. You just want to see good, solid volume. That's there, but the options don't cooperate with that one. So you just move on and you look at the next one. Parker Hannifin, all the oil company stocks went up yesterday, but the realization, I think, is coming in uh, to the oil market that any sort of effect from Venezuela is going to be um, long, long time coming. There was the announcement of the oil that's going to be shipped to the U.S. from Venezuela. Zach mentioned that in the intro, and so obviously more supply, and that's bringing the price down on these. But the other concept is to consider the amount of money in infrastructure that these companies are going to have to spend to get to the oil in Venezuela. And on Monday and Tuesday, I was both opining on this concept of, well, from what I understand, and I didn't realize how large the oil reserves were in Venezuela, but it's a thicker, harsher oil, which takes more refinery. And so I'd mentioned maybe looking in the refinery sector might be a way to go. And that turned out to be pretty accurate. You can see VLO, there's where the close was yesterday, having a good day today, and it gapped up at the beginning of the week following all this stuff. Makes a lot of sense to me. The refiners are going to have a lot of business, a lot of work to do refining that thicker oil that comes out of the ground of Venezuela once it actually is coming out. And with the barrels of oil that Zach talked about coming here, they're going to be busy right off the bat. But you can imagine going into the future as the infrastructure is built out in Venezuela and as they start pumping more business for them. So things look good for the refiners down the road, I think. Now, after this big gap up and the big move up today, I don't know if that's a space to chase right now. Perhaps we see if we get a little more backing and filling here, but we are taking out the highs from November today. But I don't like the gap up and this vertical nature of the move. So I would keep an eye on the refiners for the next several days and see if there's not a an entry available at some point down the road. And there's just a whole bunch of ones to look at. Um, Popular, Bebop, um, another one that shows up periodically. Pretty well constructed pattern here. Didn't really get enough of a correction here for a zigzag, but you like it when stock corrects sideways. And all the things that I talk about oftentimes with the fact that you want to consolidate before you try to break a point of resistance. That previous wave five, going back to September, creates a resistance line. So we consolidated underneath it here in December, and now we're trying to break above it. You could make an argument here that, I usually give that aggressive versus conservative approach. When you have a chart like this, I don't think there's really much of a differentiation. The prudent thing to do is let it close above 130. Show us it can close up there rather than just technically breaking this wave five high. Let's get above 130 and some clean air, if you will, and then we have a move left up to maybe 136 in that area. So that would be interesting to me. This one would be on a close watch list, and specifically, where do we close over the next couple of days? Because going sideways here for a couple of days would not be a bad thing. It may not do that, but I'm just saying if it were to, that wouldn't be a bad thing. So we do have April options here. Again, low open interest, and that's been the problem on this stock from my experience in the past is it shows up a lot, but from an option standpoint, it's just not that tradable because the spreads are so insanely wide. So I'll pick a couple more and then we'll go to the other searches. Obviously, kind of didn't get an opportunity on this one this morning. You can see the big move higher. I have not been through the list today, trying as much as possible to follow through with what I told you that I don't look at the AI list until we do this show so that I can go through them and you can hear my first thoughts on these for whatever that's worth. But I feel like, discussing technicals and what we're looking at is helpful. I hope you feel that way. But you can see that we gapped up in here where the pill is and then closed a little bit down or trading a little bit down. But we've already hit the target. So not much, it just didn't give us an entry on it. We like it when we get that vertical move. And then the 1000 ETF from Invesco. If you're kind of in that risk on mindset, this I think is pretty interesting from a potential continued move up to that AI target there. Pretty good way to play the space, I would think. And before we look at the options, I would want to look at the DMI because I really like that setup. I'm a little concerned that the ADX is not above 20 yet. It's doing the right things. The two directional indicators have good separation. Buyers firmly in control. The ADX is moving up, so there's strength gaining in this trending move. But how many times have I talked about this in the past? And there's a couple examples of it right here. When you have the ADX looking like it's going up, gets up to 20 and rolls over. Going back up, gets up to 20 and rolls over. It could do that again. So I would really prefer to see this ADX break above 20. Maybe it does that at the close today. That would be something to watch, especially with this pullback. I think this one would be really an interesting one to potentially send out an alert on based on that. So with that in mind, let's see if the options make any sense. And the open interest, basically, even though there's January, February, and March options on this, really is non-existent. And when you come down here and say, why is there no bid? Just means nobody's traded this. if you wanted to trade this and put an order in, you might get that. You can't trade something with a zero bid, but that also could prompt the market makers to create a bid for it because they want to get paid. They get paid by executing trades. And so if somebody shows interest, even though the first order might get rejected depending on who your broker is, or it may not, depending on their floor connections, um, just give it a little bit because, again, once interest is shown, the market makers are likely to create the bid, and then you have a spread. The spreads here are a bit wide, as you can see, so that's frustration there as well. But hopefully these things are helpful, um, even if they're alerts that we can't or choose not to send out on a particular stock. And then, of course, I see golf. I got to go look at that. That's a CUSNET, which is Titleist. If you're a golfer, Titleist and FootJoy, that's the parent company here. And so when you look at this break higher here, um, obviously, again, I find that interesting, even though the score is just a little bit below 75. And you might wonder why in the world, with so many opportunities of scores above 75, would we even consider something at 73? And that's a fair point. But I think you have to look at the chart. And, when we have this many signals, we obviously can't do every single trade, um, just unless you have a massive account. Most people don't. So we have to be picky and choosy. And so some of the things that I talked about are, diversify sectors, and then look for some things that may not be the most talked about day in and day out because those tend to be the most volatile. As long as we hold above 85 and we are a little separated based on yesterday's close on this, then I think this could be interesting. A break below 85 changes the game quite a bit on this one. It's made a nice run from 80 up. And then once again, trying to look at the options here, um, we're facing the same problem, even with the front month January options, no open interest and all these zero bids. So not much to do there either. It's just a name that caught my eye because of the symbol. If we get out to March, there's a little bit of open interest, but the spreads are still really, really wide. The only halfway decent spreads are if you get in the money and then you know what the risk is there. You're paying more to get in for one thing. And then the second part of it is if you're wrong, you come sliding down that delta curve rather fast. So, there's inherent risk there in going up the delta curve, not just benefiting from starting at the lower end. There's other benefits of starting down there where if you're wrong, you don't come sliding down the delta curve quite so fast. So there's a few there to look at, and then let's go and take a look at the other searches. And I really like this is the part that excites me the most about this coming year, 2026, which I think is going to be fantastic. The AI is just going to get better as it's true AI. And as it continues to get better, that means we'll be more successful. But the other part that excites me about 2026 is the way the market is set up now. And I've been saying this all week. I don't feel like we're in the same environment that we were last year, where 7 to 10 stocks were lifting the entire market and everything was moving kind of in one direction, and we didn't have very many bearish signals. So, at a time when the market is trying to break to new highs, to the fact that we have some scores as high as 55 on the bearish search, I think tells you that we are going to have um, lots of opportunities in 2026 across the gamut. I think we're going to have bullish, bearish, and consolidating stocks, sideways movements, whether it be a triangle for a strangle or sideways for the time strategy. We're going to have lots of opportunities this year. So I think that's the most exciting thing. So obviously this is an ADR. I'm not really familiar with HDFC, I don't think. International company, obviously, since it's an ADR. Clearly something came out over the weekend. Monday having a big down day when we've already reached nearly our bearish target there, even though it's a lower score. But it's really neat, I think, to see um, results show up on the bearish side. And look what happened on the list yesterday. So we had all of those on the list from, well, the day before yesterday. The current list would technically be yesterday's. Um, all those bullish alerts. And look, we've got a couple right on the top here on the bearish side. So again, if you're not already, let me help whip you into a frenzy on being excited about the possibilities this year. I think it's going to be amazing. This one looks pretty enticing as well. Um, JM Smucker, this is not the place that people are looking for trading right now. It doesn't necessarily mean anything's going wrong there with the company, et cetera. Just the market doesn't have interest in it. And trading from 95 down towards 91 is interesting. The spreads are tend to be across the map on this stock from past history, but you can see the Jan options have really good open interest. We go to April, we even have some open interest there, and not extraordinarily wide, but still slightly wider spreads there. So the 100 and the 105 calls look pretty interesting. Or excuse me, we'd be on the put side, switch gears to the downside, but still decent open interest. Um, the spread's a little bit wider on the put side, but not to the point where it would preclude you because we have over 100 contracts of open interest and not quite the risk of if you get in splitting the spread that you would have problems getting out splitting it. That's the concern on the low open interest, not getting in, getting out. But with this, not as much of a concern once you go above 100 contracts is what I look at. So on the put side of things, that one looks pretty darn interesting, I think. But how exciting is that? I mean, look at these scores. Now, there are not that many that are near 70 other than SJM and TSCO, Tractor Supply, is in this area with almost the same looking chart there, even though they're totally different stratospheres as far as their business models. But breaking below 52.5 was big, and just kind of following the 10-day moving average on the way down. This one also looks good from a bearish standpoint, and maybe there's more liquidity here. Yeah, not really. At least no, it has weeklies, so never mind. That could just be on the weeklies. So let's go to the March monthlies. Um, Looking over here on the put side again, you can see really good open interest, much tighter spreads. Um, 44 would be the delta we would have to pick because it's a little higher on the curve than we would like. But then when we drop, the next one is a 17 minus 17 delta. So I don't like to go below 20 if you're wondering what I'm looking at there, because again, the shape of the delta curve, if you start too low on the curve, you can be right on direction and the options really aren't making any money because the delta is flat and that tells you how much they're making on the next dollar the stock moves. So you're not making much if you go too low on the delta. So it is kind of imperative to be more in that 25 to 30 range. If we have to sneak a direction, then going up the curve a little bit would be better. Even though it's not ideal on the delta, it's not that bad, and the spread's not that wide. So that looks like a pretty promising idea, I think, there on the bearish search. And then as we go to the Wave 5 bullish search, again, lots of results with good sized scores. And I think we could find something pretty interesting here as well, especially this one that's in the financial area. The first concern would be, well, with a lot of financial stocks performing very well, what was going on here? Why did this one just underperform so bad? And is it finally exhausted to the point where people might look for this bounce back to the upside. Um, I think looking in the financial sector for these bounces could be both good and bad. And that's that maybe they're oversold for whatever reason, and they're due to catch a bid where the whole sector moving higher draws these underperforming stocks with it, or is there something nefarious going on with the company and it's not one you would want to touch? So when you see this, it does heed doing just a little bit more research and finding out why did this go down so much. You can check news on most of your broker platforms. Just plug in the symbol and it'll tell you the recent news, and try to find out what is going on with why the stock moved down. So I think just a word of caution there before jumping in saying, "Oh wow, it's a financial, and it could bounce here because it's underperformed," and it could do that. But if there's something really bad going on that causes downward move, then it might be one that you just want to stay away from and not get involved. Uh, Round Hill Hood weekly pay. Not sure what who HOOW means. In the I guess it's for Hood Weekly is where they came up with the symbol, but don't know anything about this company. I would want to know a little bit more first. Once again, the reason that I'm saying do a little bit more research on these is why have they been so underperforming the market? Usually there's a reason, and maybe it's exhausted, maybe it's not. So those some ideas there, and then quickly we'll go and look at the sideways results. We'll see if there wasn't anything 2 days ago, nothing here, but I do think we're going to get some pretty good examples, especially as we move into earnings season. Once we get in there, we're going to see a lot of opportunities from stocks that fall big on their earnings reports. So super excited about the coming year from the AI side of things, and just a plethora of potential alerts to do across the spectrum of all the different portfolios that we have. So with that, Zach, I'll go ahead and open it up to a few questions before we wrap things up for the day.
Sounds like a plan, Rob. Let's get right into it. Got a question here from Maria on JPM. Is reason for decline too far from the 10-day moving average? There are two zigzags, both of which hit 100%. First one starts around December 8th, and second one starts at the B wave of the first zigzag. First zigzag is retracing to 61%, and 10-day EMA with this pricing action, the second zigzag is retraced more than 61%. Does that mean the second zigzag is over, irrelevant? Not sure of the rules here. Indicators don't look great. Earnings next week, I would expect JPM to do well. Thoughts, and does the CEO talk too much?
Uh, he does, but Jamie Dimon's pretty well respected, so people tend to like it when he talks. But um, he's changed so much over the years. He's a guy that I've listened to. He's one of the. I'll turn on the volume when he comes on, just because he's so widely respected. So a lot of people pay attention to him. But even a lot of the commentary I've heard kind of goes along with what I've been feeling, is that as he's gotten older, and he did have a very significant health scare a year or two ago, and he's just his tone seems to be more downbeat now than he was so positive in the past, and he's changed that tune. And then he was anti-crypto, then he's for cryptos. So he's kind of been a loose cannon, and I think that's why you're asking, Maria, does he talk too much? And I think that's valid. But yes, on this last zigzag pattern here, we did hit the 100% extension, and then I'm sure you saw that there's another one right here. I think it's what you were mentioning, and both of those with 100% extensions, almost in the exact same place. So remember that when you have a zigzag in a wave three, there's a pretty good chance of getting that extended C wave. But we're not in a wave three, so we're in a wave five. You can still get those extensions on the C wave to the next fib target, but they don't happen as often in a wave five as they do in a wave three. It doesn't mean they don't happen because they do. It's just they don't happen as often. So we had a little bit of a point of resistance here with those 200% extensions. Yes, we did get a little bit away from the 10-day moving average, and it's just across the board today that pretty much all the financials are pulling back today. I think it's just, they had a nice run, and it's just normal backing and filling that's going on. Nothing really has dramatically changed. In fact, the economic data continues to come in on all these ISM reports under 50 showing contraction, which does give the Fed the possibility to cut rates again if they want. That's all the speculations what I've been talking about this week is that we're going to hear that incessantly about whether or not they'll cut in January or not. So if you're long JP Morgan, I wouldn't be concerned at all unless we broke down here below 320. A break below that changes everything because that's a lot of support right there. So we broke above it, came down, quickly tested it, then had a big vertical move. We've come back, and so far so good on it. And I do agree that I think their earnings are going to be solid. Um, Maybe their guidance might be a little better than the actual numbers as they look forward to a monetary easing type environment. But I don't know. Jamie Dimon tends to be a little conservative in the guidance, so what he says, I'm not sure. It could have short-term effects, but I don't think the financial sector is done yet. I think they're just going through a pause today. And anyway, a lot of talk about that one, so stop talking so we can get some more symbols in.
No worries. Follow-up question from Maria is also nice day in St. Louis playing golf for the first time in 1.5 years. Besides have fun and hit them straight, any advice?
That's the main thing, and boy, I love giving tips to people. I'd have to see your swing, but congratulations on getting out there. Amazing you could get out there this time of year. It's been warm enough even here in the mountains to get out. Just haven't had a opportunity catching up from the holiday break, but yeah, have fun is key. Just go enjoy yourself. Don't outthink yourself, especially when you haven't played for a while. Um, One of two things can happen. If we haven't played for a while, we go out and we don't really know what to think because we haven't played, so we don't have a lot of thoughts in our mind. And oftentimes you'll have a good round because your head's not getting in the way, literally, the mind. Um, or sometimes we're thinking of everything because we haven't played, and that could cause a not fun experience. So my advice would be go out, just enjoy being out there. Don't outthink yourself. Just let your natural swing take over and enjoy the day, and then you can start working on things later on. But yeah, congratulations. Jealous.
Yeah, ditto to that. I'm jealous as well. A question from Brian on FCX. The initial target was around 54. With the new AI alert, do I just hold the position and adjust the target? The first FCX alert was on the 22nd of December.
Yeah, and gosh, looking back, but we got out when it hit its target, and then yeah, a new target, which is cool. And so, congratulations for staying in it. Um, the commodities pulling back a little bit today as well, but they're doing the same thing that the financial sector is doing. You can see, boom, boom, two big vertical days. So odds are you're going to have a little bit of a pullback, some backing and filling, but. Uh, I see if you're still in this, no reason to exit right now. We're still above the 10-day moving average. It hasn't even come back to that yet. And holding above a concern line would be right there. A break of that price level would worry me that this move is over. Um, and you always have to respect that possibility when you have these vertical moves. Is it a vertical move that has legs? Is it a blow off top type scenario? Difficult to know. Um, but for me personally, I think this is a story that's going to be with us for a good part of the year. commodities, et cetera, especially in the early days of the easing. No, I shouldn't say easy money, easing, QE light that they're calling it. So there's just a healthy pullback today with two big vertical days. And again, as long as it stays above this line, I was going to give you the price there. Long as it stays above 52 and a half, I think still be constructively long there.
Thanks, Rob. This next one's a funny comment here from Bill. Given the quantity of FootJoy shirts that I bought, symbol golf, GOLF should be higher. And yeah, no, I agree with that. I think both Rob and I, obviously Rob more than myself, have made a fair contribution in that aspect as well. So would like to have
Yeah.
some common shares in that.
Oh, have a lot of Nike and FootJoy shirts in my closet. Absolutely. And I agree with you. I mean, what it costs for just a golf shirt is insane. So agreed that that stock should be higher. I don't use Titleist golf balls though, so I haven't contributed there. I don't like the dimple pattern, but yeah, that's getting off subject. But yeah, it's I can relate to that comment. The FootJoy shirts run a little bigger for me, so I always go a size down on those. But anyway,
A question from Renault on ATI. I'm still watching that deer.
so we're hanging in there pretty well. Anything above this consolidation, and we talked about the stair step setup and that it might do this again following these two up days, that it might go into another consolidation here before a move. I don't see anything that precludes that. So I would say this looks like it's building us only a 59% score, but that setup looks pretty solid. Um, the DMI, the ADX being above 40 and curling down is concerning, but not unexpected with basically we've consolidated for 3 days now. So that's created that little tick down. The positive directional indicator ticking up and the negative ticking down today is positive as well. What we would like to see is a repeat of this, where the positive directional indicator got back above the ADX after breaking down below it. Here you can see very similar setup to what the ADX did. It just wasn't as high. It was at 25. It came down, then positive directional indicator moved under, and then it broke back above it. That's what you want to see here as well. But I don't see any reason at this point in time to exit this if you're in it. Just watching for an entry, we might be getting close.
Question from Jim. What's going on with INTC?
Lots of commentary on the financial networks this morning on Intel, and they were talking about it as like a fun play type of thing, like they're not a serious AI type contender. I mean, I forget the exact words they were using, but there are people that are interested in it, but there was a connotation there on this not being as deep involved in the AI, et cetera, as you might think. But nice move up today. Uh, we did trade above that December high, but you can see that at least where we're trading at this point is below that. Would like to see a close above this early December peak, obviously, before doing anything, even though it's kind of come back to the 10-day moving average over the past couple of trading days. You need to see that close up here. And then we have a little bit of room from the 61.8% extension up to the 100%, which dissects the tap box right through the middle. So I think there's a potential trade here, just wouldn't do it until we saw a close above that December peak.
All right. And the last question I have for you for today's session is from Brian. Is there any way to have the old AI alert show on the graph with the current alert? So perhaps that goes back to our discussion yesterday, or maybe it was Monday, Rob, on accessing the symbol from the AI calendar, and it should appear that way. And we've made note in the Hub development log for that to be available just in general if you were to search the symbol from the symbol window.
All right. Sounds good. Well, finish that one right on time. Maria, enjoy your round of golf. Let us know how it goes. And then for everybody else, thank you for spending some of your Trading Wednesday with us. And we do appreciate your time as we talk about always excited to be back doing these events each and every week for the year. And so excited to see how 2026 plays out. The potential is pretty amazing. So really looking forward to this year, especially with all the things that I mentioned earlier as reasons why. So enjoy the rest of your trading day, and hopefully we'll be talking to you all tomorrow night during Insiders. Take care, everybody.